Firstly, I expect that this year's budget will break away from a very long-running trend of deferring expenses. I think that historically the Indian budgets for over a decade or even more, much longer, budgets have always tried to push their subsidy bills into the next year, and this kind of thing has been done. So it basically distorts the fisc. So I think that this budget should be a come clean budget where these things are presented in a very clear, transparent way. The second point that I expect is that I think personal taxation is something where the government will put more money in the hands of the middle class and encourage them to spend, because that will be a good way of stimulating demand in the economy. That is another aspect that I think will happen. I expect that there should be a move towards a uniform long-term capital gains rate. I think having different tax rates for different asset classes is not a bright idea. It distorts asset allocation of investors. So allowing them to, choose on the merit of the asset class rather than based on the tax rate is something that is a long pending need. I expect that the finance minister will address that need. So I would think that the long-term capital gain will be made a uniform across assets for 2 years, and the rate will be accordingly fixed. This rate, I think, should be something which will desensitize people who evade taxes. It will encourage more people to shift from one asset class to another. It will create the required liquidity for investment in much needed spaces like real estate and infrastructure bonds. So it will also deepen the bond market. So I expect something to be done which will structurally be a paradigm shift, not only for the investors but also for the economy. And I think that capital gains is a very critical lever in that, and domestic investors should be nudged to be more balanced in their investing. So that is another thing that I expect. I expect the outlays to be in line. I also expect some reform, some incremental reform on the direct benefit transfers to farmers. I am not one of those who believes in giving subsidies through the fertilizer companies. I would believe that if the farmer is to be incentivized, the government can transfer the money directly to the farmer and ask him to choose what he wants to do with it. So I would want to take the fertilizer industry out of the subsidy chain completely. And this would be efficient even from the government's point of view. So these are some of the ideas that we expect. On the infrastructure front, the government has to come up with some out-of-the-box ideas which will help actualize the target they have set for 5 years of infrastructure investments. There's no question about the necessity and the urgency. So that urgency should be reflected in how government is going to mobilize. Some innovative ways of mobilizing should be on the table. So this budget is the best time to do that. So on that front also, I expect something radical.
My expectations from Budget 2020 are that the government needs to start looking at revenues from non-taxable sources. So don't increase duty, don't increase taxes. But you do have a lot of other levers. Some of them include selling part of the assets which they have collected over the years, some of which are really valuable and perhaps belong more to the general public than to the government. You want to pay, for instance, they could get rid of their stakes in ITC and through the SUUTI. That will generate over 40 or 50,000 crores, which is roughly 10%, 11% of the deficit that the government has. And you could do many such things in times like these. In fact, the economy is going down. You shouldn't be increasing taxes. You might actually want to reduce them, but we understand that the government is constrained. But increasing taxes at this time would be a nightmare. So find non-tax sources of revenue. Another big piece that the government actually, the RBI has been fighting here is the fact that there's so many dollars coming in that the RBI has to print a lot of rupees just to be able to manage the exchange rate. We've reached 450 billion plus in exchange rates. More than 300,000 crores has been printed in the last year or so by the RBI just to control the rupee. Now, I think one of the reasons why we've always said that the rupee should not be capital account convertible is that foreigners will take their money out. But you know what? They're putting their money in. It's time to free the rupee. It's time to make it capital account convertible. It's the right time, at least in my opinion, that the government should actually embark on such a venture. And lastly, I think we've had too many groups. This is maximum government, not governance at all. There's too much government with everything that we do. Anytime somebody starts a private limited company, they have to stand in front of an office that they are supposed to already have, and they take a photo with the company's name board in front. Such rules, there are hundreds of them, are stopping and stalling more investment in private business. And I think we should encourage private enterprise, especially small and medium enterprises, and therefore we should actually actively remove rules and definitely not introduce new into this picture. Therefore, I believe the government has a mandate and the right time to actually reduce its size, to reduce its expenses also in that context, but to also reduce its size, the number of rules they put on businesses, and stop treating everyone as if we are all money launderers or people waiting to not pay tax. I think everybody wants to participate in the growth of the economy. Everybody understands this. Now the taxes are required, but when we start treating everyone with suspicion with new stupid rules, it just hurts us. There's a startup tax. A company has to justify its valuation to an income tax department every time they get capital. And one of the biggest beneficiaries of the startup world getting so much money from abroad has been India. We have received so much money in the past, and even today, new startups that are getting money from Indian individuals have to do this startup tax rules, which just hurt the creation of new business. I think India should evolve further from here and change things. I don't have any other experience.
So 2-3 things there. I think personal income tax has to be, relaxed. You can't have a guy who's going to office early morning, returning back late evening, and paying taxes at a rate more than the company for which he's working. So, that's a no-brainer. It has to be relaxed. Second, LTCG hasn't made money for the government, but it has destroyed the consumer culture in India, because when your portfolio of 20 lakhs erodes 50% in value and becomes 10 lakhs, you go to a mall and pick up a bag of popcorn and some French fries and you come back home. You don't spend money on buying goods and services because mentally you think that you've become poorer. So LTCG has to go because government in any case isn't making any money from LTCG. Third, dividend distribution tax. Companies are not quite keen on actually distributing dividends because the dividends actually attract a dividend distribution tax. So it's a tax at 3 levels if you look at it. So these 3 things the government can do and should do. Whether they do or not, we'll find out on the 1st of Feb.
Firstly, I am hoping for some dispute resolution scheme by the government so that the tax disputes that have been locked in endless litigations can be freed up. Secondly, the savings rate and the consumption growth has been down, so I'm hoping for changes in tax slabs or reduction in personal tax rates. Lastly, I'm also hoping for changes in taxation on dividend. Currently, the same set of profits are getting taxed twice and in some cases thrice. So I think it's important for the government to make some changes on the tax rate on dividends.